it's a combination of different things. There's no question. I mean, usually most firms, most hedge funds don't have. I guess this was technically a family office, but it run like a hedge fund. Don't have more than 2 prime brokers. And so should they have known? Was he just lying? It's pure speculation right now. But the other thing it does raise further questions though too is how much, there's a lot of leverage. We all know that the margin debt is at an all-time high. Again, this past at the end of February was the most recent data that we have, and that means there's a lot of leverage in the overall system. Is anybody else as leveraged as these guys were? Probably not. But a lot of trades tend to be crowded, and if you get a group of them all going in one way, in one direction at one time, that could cause another blowup. And it's just concerning. It just shows you that this market, there's a lot of funny things been going on lately. This short squeeze in GameStop and some other stocks, and the moves in some of the SPACs, et cetera, et cetera. These wild moves are just not what you usually see in a really healthy market. It doesn't mean that we're coming into a bear market or really bad market, but it does say that the risks are higher than they had been, say, in the fourth quarter of last year.
The risks may be higher, but do you think that this issue is now done? Because we've seen the impact play out, and most banks have come out and declared whether they will suffer losses or not.
Well, but it's still impossible to tell. We just don't know if there are other firms out there that had similar sized positions. And the thing is, where there's smoke, there's fire. And we've seen it a lot in the past. I mean, we have had situations, long-term capital management, but they're very, very sophisticated in a lot of different fixed income markets that almost nobody else was trading in. And so it was kind of a one-off situation. It created a much bigger decline in the markets, but things were able to stabilize. But these people, Archegos was in the stock market, a lot of people in that market. So it's hard for me. It's impossible, I think, for people to say, don't worry, everything's clear. It's going to take at least a couple of weeks before we know that for sure.
You said a moment ago, Matt, that because this is a very expensive market, therefore the risks are higher, whether it be something like a black swan event from Archegos or Archegos, depending on how you pronounce it, or it's something else. So what do you think potentially is the something else?
Well, I mean, of course, it usually comes out of left field. You don't know for sure. But the one thing I'm really worried about right now, and I'm going to overstate it, but it's just that, the market is priced for perfection in terms of coming, just like it was last February, in terms of the coronavirus. And right now, everybody's saying, don't worry, there might be a third wave coming, but we have all these vaccines out, and we don't have to worry about that. We know how to. The doctors know how to take care of it. But the issue is not, are we going to have more deaths? The issue is, are we going to have more hospitalizations? And we're already seeing in Paris where their beds are filled. And so if we have something like that, it spreads to more parts of Europe where suddenly they say, oh my gosh, we have our healthcare system is overwhelmed. We've got to re-engage in these lockdowns. And if that happens in Europe, I mean, it could happen in the United States as well. Everybody's saying, no, we don't worry about it at all. The complacency is unbelievable. But if the lockdowns take place, we're not going to get the kind of growth in either earnings or GDP growth that the market is pricing in right now, and the market will have to come down.